Welcome to the TEK2day podcast, powered by CEO Rater. It's your host, John Maeda. Check us out online at ceorater.com. Visit us at TEK2day.com, TEK2day. It is Sunday, May 3rd. So after a couple of weeks of earnings calls in technology land, it feels like things are in line with our expectations. Business got progressively worse through the end of March. In April, it sounds like things plateaued. They may have bottomed out. And this is for software. This is for the large platform companies, Google, Facebook, so forth. But beyond the bottoming at the beginning of April, nobody has visibility into what the second half of the year has in store. I mean, that's what we expected going into earnings season. Where the disconnect is from my point of view, having no visibility is not good news. Saying that business may have bottomed out is good news. Stocks have ripped over the past month and lifted further off of those earnings calls. Didn't really start to roll over a little bit until Friday. And my friends, I'm telling them, short the index, by the way, as of early last week. And so where you have a disconnect is fundamentals are poor. Stocks are near or at all-time highs. And then if you look at consensus estimates, analysts, like they are so often guilty of, have a hockey stick recovery in the second half of calendar 2020. So you have things getting a little bit better in the September quarter and then much better in Q4. And if you look at the one I actually spent some time on in terms of building a model was Google with their ad business, which is a discretionary business. Sure, they're one of the leading platforms with Facebook, but ads are a discretionary business. And so if you look at the street, this was as of, I guess I would have built my model on Wednesday night. I was 6% below the street, 6 to 7% below the street on Q3 revenue estimates, and 18% below the street on Q4 revenue estimates. So I had a model the modestly down revenue year for Google, and the street has an up year. And I think that's where the disconnect is. Even if the truth is somewhere in the middle, street estimates are typically always too bullish. And sell-side analysts typically always build a recovery in too quickly. And if you look at the piece that we have coming out at TEK2day this evening, I think it's scheduled to come out at 6 p.m. Eastern time. We built a database that aggregates information for the 19 states that are reopening and what their plans are around the various constraints they have for the businesses that are allowed to reopen. Certain states maybe only allow 10% occupancy. So, for example, if you have a restaurant, only 10% of your tables, as an example, would be allowed to have customers. In other states, it's 20. In other states, it's 30. I've seen as high as 50. It seems the most common range is 20 to 30% occupancy for those 19 states that are allowed to reopen. And so you just look at this, and we wrote about this a couple of weeks ago, the Trump administration's 3-phase plan for reopening the country. It's going to be some time. It's going to be some time before the country reopens, and who's to say what people's behavior will be. We've included some videos which you can check out in the article that's going out this evening, where in these cities and towns where restaurants have reopened, customers are hesitant to come back. So behavior is going to take a while to change. And that means, mathematically, it's just going to be impossible to have a V recovery. So the pace at which the street expects recovery to happen is much faster than what the economic reality is, in my opinion. And I think the fundamentals are going to start to matter a lot more if you're invested in equities, if you're invested in technology stocks. So all this liquidity that's been pumped into the economy, which has in large part been responsible for stocks running, matters less as it's dissipated across the economy. And fundamentals are going to matter more. And the fundamentals aren't great. And the fundamentals are worse than what the street has built into their expectations. That's the economic reality. So that's why I think this market rolls over, as we've said for the past month on this podcast and at TEK2day. And then a permanent recovery will start to happen as time goes by, as we open more cities, as we have a vaccination. But visibility into when and how people may return to business in different states, all that stuff's unpredictable. It's unknowable at this juncture. So not doom and gloom, but I certainly don't see signs that business is really accelerating in certain pockets of the country and certain industries. That's all for now. See you next time.